If you're looking to buy a home and you're in a low income or a fixed income and you need some advice on how to start, this video is just for you. There are ways to acquire the funds needed to purchase a house. Your best bet is going to be applying for home loans, and they all vary depending on your level of income. By the way, I just dropped a video a few weeks ago all about all the things that can go wrong during the home buying process in 2021. If you have not seen that video, I suggest watching that video before venturing out to purchase a home, because there's so many things that can go wrong, and I just want you to be prepared for all the things that can go wrong. And I will link to that video up here. There are 9 home loan programs that I will discuss briefly in this video to give you an idea of what you can do to gather the funds needed in order to purchase a home. If you are a returning subscriber, hey, and if you are new here, subscribe to join the tea party. Now let's get into the video. So the first loan is the Home Remedy and Home Possible Loans program. Fannie Mae's Home Ready program and the Home Possible loan from Freddie Mac feature low down payment requirements. You only need a down payment of 3% of your home's purchase price, and there is no minimum required contribution from the borrower. That means the money can come from a gift, a grant, or a loan from an acceptable source. Even better, the home seller is actually allowed to pay closing costs worth up to 3% of the purchase price. So instead of negotiating a lower sales price, try asking the seller to cover your closing costs. Private mortgage insurance, PMI, may also be discounted for these low-income home loans. You're likely to get a lower PMI rate than borrowers with standard conventional mortgages, which can save you a lot of money per month. Finally, Home Possible and Home Ready may make special allowances for borrowers on a low income. For instance, Freddie Mac's Home Ready program lets you add income from a roommate or a renter on your mortgage application, even if they're not on the loan. This can help you boost your qualifying income and make it easier to get financing. You might qualify for a Home Ready or Home Possible loan if your household income is below local income limits and your credit score is at least 620. So the next loan program is the USDA Rural Housing Mortgages. If you're not buying within city limits, then you may qualify for a USDA home loan. This program was created to help low-income and moderately income households buy homes in rural areas. With a USDA loan, you can buy a house with no money down. The only catch is that you must buy within a USDA approved area, though these are more widespread than you may think. There are 2 types of USDA loans. The guaranteed program is for borrowers whose household incomes do not exceed 115% of the area median income, and the direct program for those with incomes between 50 and 80% of AMI, which is what I mentioned before, area median income. Standard USDA guaranteed loans are available from many mainstream lenders, while the direct program requires borrowers to work directly with the U.S. Department of Agriculture. You typically need a credit score above 640 to qualify for the USDA loan programs. And I will say, this probably is with any standard loan. You just make sure that you keep your credit score as good as possible when applying for these loans. The next mortgage loan program is the VA Home Loan program. The VA mortgage for military home buyers is not restricted to low-income households, but it's helpful for several reasons. First, there is actually no minimum credit score for this program, although lenders can add their own minimums if they want. Typically, they require at least a FICO score of 580 to qualify. Second, there is no down payment requirement, so you can finance 100% of the purchase price. Third, there is no mortgage insurance. There is a one-time VA funding fee, but this can be wrapped into the loan amount. Finally, VA mortgages allow the sellers to pay up to 4% of the purchase price in closing costs. So if you find a motivated seller, you could potentially get into a home for little or nothing. If you are a veteran, an active duty service member, or a surviving spouse, the VA mortgage program should be your first stop. The next program I'm sure you've heard of is the FHA Home Loans. FHA loans are specifically intended for low incomes, lower credit scores, and first-time home buyers. This program, which is backed by the Federal Housing Administration, makes it easier to become a homeowner by relaxing the standards that borrowers must meet to get a mortgage. Depending on what lender you choose, you may be qualified to receive an FHA loan with a debt-to-income ratio up to 45% or a credit score as low as 580. Select FHA lenders even allow credit scores as low as 500, as long as the borrower can make a 10% down payment. So the next loan program is the Good Neighbor Next Door program. This program offers unique benefits for nurses, first responders, and teachers. If eligible, you can buy HUD foreclosure homes at a 50% discount. Use an FHA mortgage and you only need $100 for a down payment. You can find the homes on the U.S. Department of Housing and Urban Development website, and you need a licensed real estate agent to put in the offer for you. If your offer is accepted, you can qualify for financing once you get the home. Then we have the FHA Home Loans. So the FHA loans are offered in partnership with the state and local housing finance authorities. Many FHA loans are conventional mortgages backed by Fannie Mae and Freddie Mac. They may require as little as 3% down, and many FHA loans can be used in tandem with down payment assistance programs to reduce the upfront cost of purchasing a home. Borrowers who qualify for FHA loans may also be in line for other discounted mortgage rates, including mortgage insurance. To qualify, you'll typically need a credit score of at least 620. And eligibility requirements may vary depending on the program. So the next thing is down payment assistance programs, or DPA for short. DPA is exactly what it sounds like. It helps you pay the down payment and the closing cost on your home purchase. So DPA programs may be offered by government agencies, nonprofits, or through other sources. They usually take the form of a grant or a loan, though the loans may be forgiven if you stay inside of the house for at least 5 years or so. Most DPA programs are targeted at low-income homebuyers and have guidelines that make it much easier to qualify. Some, however, provide assistance to those looking to buy within underserved or redevelopment areas, regardless of income level. Average down payment assistance is about $12,000. And a lot of people who qualify for this program actually don't apply for it because they don't even know it's a possibility to have this. So definitely look into this if you're looking to purchase a home, regardless of your income level too, because you may be surprised that your income actually may qualify. You may think you're low income, but it actually qualifies for this program, and why not take it? It's really almost like free money. So definitely look into it. The next program is Mortgage Credit Certificates, or MCCs. MCCs are a home ownership program that allows you to stretch your home buying power. If you meet income eligibility guidelines, you could get a tax credit equal to some percentage of your mortgage interest. Lenders are allowed to add this credit to your qualifying income when they underwrite your mortgage. This allows you to qualify for a higher mortgage amount than you otherwise could. Mortgage credit certificates are issued by many states, counties, and cities, and their rules and amounts vary. The next loan program is the Manufactured and Mobile Homes program. Manufactured housing is some of the most affordable around, and they're actually becoming popular nowadays. I've been seeing a lot of videos on YouTube with families moving into these homes. They're extremely affordable, and they're actually pretty cute, to be honest with you. I really like the way they look, so this is like a new thing. Homes on approved foundations and taxed real estate can be financed with many mainstream mortgage programs. However, many programs do require slightly higher down payments or more restrictive terms for manufactured homes. Home Ready, for example, increases the minimum down payment of 3% to 5% if you finance a manufactured home. But when you think about it, these homes are much less expensive, so really 5% of a much smaller amount really doesn't come out to much. It can actually end up being less than the 3% you're putting down on a standard home. Mobile homes that are not classified as real estate can be purchased with personal loans like FHA's Title II program. These are not mortgages because the homes are not considered real estate. So that is it. Those are the 9 low-income home buying programs that may get you into a house regardless of your income level. If you enjoyed this video, please throw me a like. And if you want more content like this about personal finance, paying off debts, securing finances for your future, for generational wealth for you and your family, subscribe, hit the bell to be notified when I drop my newest video, help your girl out. And until next time, friends, bye.